Welcome. So guys, since the market, we're currently not in a market that's having a lot of movement right now. The market is kind of slow. We're nearing the end of the summer, about to go into the fall. So around this time of year, there's not a lot of movement in the market. People are taking vacations in the big banks, the big institutions. Their traders are usually on vacation. So the market generally slows down this time of year, but it does pick up. It does pick up after the summer. So since we're in this market, I thought that we would just take some time to just look at the new level strategy, go over the strategy, probably do a little back testing, and talk about why the strategy is so profitable. Okay, so guys, the strategy that I trade is called New Level. It is a momentum-based strategy. Okay, we trade momentum. I use a couple oscillators on this chart to show me momentum as well as divergence. We trade momentum on the higher time frames, basing the momentum off big levels. I use the big levels because they're actually better, right? Trading the higher time frames gives you more quality trades. They actually give you less trades than trading the lower time frames, but the quality of the trades that you get is a lot better. Okay, you combine the higher time frame with big support and resistance levels, as well as momentum in the market with volume. You combine those things and you have a pretty good trading strategy, such as the new level strategy that I currently trade. I created that strategy, and you get, like I said, you get big movements, thus giving you better trades, higher winning percentage, and peace of mind, because you're not dealing with the noise of the market. Okay, when I say noise of the market, I'm talking about some movements on lower time frames, spikes in the market, quick movements, market makers shooting the markets up, taking out all of the stops, stop hunting the market. On the higher time frames, you really don't have to deal with those type of things. Of course, you're not going to win every trade, and once the market makers decide they want to go ahead and clear the board, they're going to clear it anyway. But on the higher time frames, you have less of that. So believe it or not, the less you trade, the more money you can potentially make. Why is that the case? Because the less you trade, the more money you're risking in the market, the less trades that you take, the less opportunity or potential for you to lose money in the market. So I tell everyone, if you're going to get into trading, or if you're going to start trading the markets, start on the higher time frames. Understand what's going on in the market. Find you a strategy that fits your personality, also fits your lifestyle. Understand that strategy. Understand why the market moves the way that it moves. Take your time, learn what you're doing, and then start to trade. Trading is not a get-rich-quick thing. It's not something that you can just come in and decide that you want to tell the market what to do. It requires a lot of patience, but even before patience, it requires understanding. I encourage everyone, if you're going to get into trading, understand why the market moves the way that it moves. Understand what you need to know about who really controls the market. The big banks, the market makers. Understand that you're never going to beat the market makers. You're never going to determine what price is going to do. We're just retail, small investment traders. So we don't really call the shots in the market. Your job when trading is just to figure out or wait and see what the major banks want to do with price, and then you just hop along for the ride. That part requires patience. But again, before you can even use patience, you got to understand what's going on. And if you understand what's going on in the market, then thus you will have patience, because you don't want to lose your money. You know when the moves are about to happen, because the market makers does show you what's going to happen. And if you do that on higher time frames, it's much easier to see. So let me get off my soapbox. I'm gonna stop preaching. I'm gonna back test this strategy. on a couple currency pairs. I'm only going to do a couple pairs because I don't want the video. I'm going to try to keep this video below 12 minutes if I could. So I'm going to backtest this strategy on a couple currency pairs. You can look at this video a few times, just figure out how I'm backtesting, and just pick the pairs that you trade, or just pick some different pairs and just do it the same way. I won't go through my entire strategy. I won't break it down, but I'm just going to give you guys the gist of it and show you why this strategy is so successful. It actually has a 70 to anywhere between 75 and 85% as a hit rate on this strategy. Now let me show you why. So you can see the strategy, and I did not cherry pick these charts. This is just a chart I was on. So I'm gonna put in a line. I'm gonna put in 2 lines. I'm gonna put in a line. We're gonna back test. Let's see. Right here, this is where May 1st, 2019. So this is back testing in the current market, and we're gonna go to, let's do up until the month of July, last month. So let me just adjust this line. Let me make it thicker. Reason I'm gonna make it thicker because I want to be able to see the difference in this line and the line that I'm going to use to mark off where I'm going to start trading at. So let me duplicate this line, put it right here. All right, so in between these lines right here, you have the month of May, June, and July. This is a daily chart. So from this line to this line represents 1 month of price data. From this line to this line represents another month of price data. This is a daily chart, so these are daily candles. Every candle represents 1 day, and you should have about 20 to 22 trading days in between these lines, because it's usually about 20 trading days in a month, anywhere between 20 and 22 trading days in every month. So let's take a look at this strategy. Now, again, I'm not going to give up the strategy to you, so I'm going to just show you the places where I would have taken a trade, and then you can see based on my analysis. And no, I'm not cherry picking the market. I am showing you exactly where I would have taken a trade based on my analysis, based on this strategy, and you can see why this strategy is so successful. As a matter of fact, I'm going to intentionally throw in a couple losers, and you will still see, even with the losers that I'm going to intentionally throw in, although I probably wouldn't have taken these signals, but you will see how successful the strategy is. So now let me change the line. I'm going to change the line. I'm going to take it from red. I'm going to make the line, I'll make it black. I'll make the line black, make it thin. So that's the trading line. That's the trade. Well, let me change it from black because these other lines are black. Let's make it, hopefully you can see this or not. I probably won't be able to see this in the video. So let me change this line. Let's make it blue. All right, so let's go with this blue color right here. And then I'm going to show you guys how awesome this strategy is. So here's the month of May. Let me stress to you, trading on the higher time frames, you get less trades. Most of the time, if you're trading the market, if you are a counter trend trader also, if you trade with the major trend as well as the counter trend, then you will get one to maybe 2 trades a month in a particular currency pair. I suggest that you trade as many currency pairs as you can, because it's not about the currency pair. We're looking for a particular pattern and a particular way the market is moving to decide whether or not we're going to take a trade. So here we go. So we're at 8 minutes and 50 seconds. Haven't done 1 trade yet, but here we go. I'm going to go through this really fast because, again, I'm not here teaching the strategy. I'm just showing you the profitability of the strategy. Here we go. So I wouldn't have taken the trade here. This is not what I trade in. I trade momentum. So let's say, okay, so I know I wouldn't have taken this trade just on how price data is right here. These small candles does not give me an indication that the market wants to move. So I would not have been trading there. But just for the sake of example, let's just say I took a short right here, right? I would have lost, say my stop went behind the swing, I would have lost 50 pips. All right, so let's start off. Bring up my calculator. Bring up the calculator. So let's start off negative 50 pips. Bam. Negative 50 pips. All right. Would have took this trade here. Probably would have hopped in based on this candle, right? Based on the momentum in this market, I took this trade right here. The candle's a little bigger. Let me show you guys. Candle's a little bigger than what it looks like. Based on the momentum of the market, I'd have came in, I'd have put a stop loss right here. You can look at my other videos, you see I'm not cherry picking, that's why I put my stop loss 20 high this momentum. Bam. That's the close of the candle that gave me the signal, right? Close of the candle, which means this is my trading day, right here. Let's say hypothetically we go in right here based on this candle. Boom, 1-to-1 stop loss, 70 pips down, 70 pips up as a stop loss, 70 pips down as a take profit. We're selling short. That's one winner. Plus 70. All right, we're up 20 pips so far. If you are a counter trend trader, which I used to counter trend, even sometimes I do, but I'm not going to even count counter trend trades because the overall movement of the market is down. I prefer to trade with the trend. I prefer to trade with the trend. So I will be if I chose to take a counter trend trade, yeah, that's one thing, but I'm not going to count it in this example. So I'm only interested in taking shorts. This is called really good price divergence right here, right? So any of this right here would be a sell to me. Anything would be a sell to me. All right. So boom, no counter trend trades for me. Let's go. Next trade. Next trade. I'm looking for it. Boom. There go my entry. I'm taking this trade right here. This is the short. This gave me the signal. Close below. That's the trade. Price there. Right? That's my entry. The close of this candle. Actually, the close of the candle is right here. That's my entry right there. It's my entry right there, y'all. Okay? That's my entry. Here's my stop loss. Swing high right there. You look at these candles and say, hey, it hit your stop loss, you lost. No. This is my entry. Price never touched it. Price hit my entry right here. 69 pips. Did it give it to me? No. Although I know I would have got out of this trade right here. This is my exit strategy. At this position right here, I'm out. When I get this right here, I'm out. Right? So I pretty much broke even on this trade. This is a break-even trade. Once this price crosses over right here, close of this candle, I'm out. So let's add in a 10 pip loss. All right, we're gonna worst case scenario this thing. So minus 10 pips, getting off to a rough start. I told y'all this was a 75 to 85% hit rate. It's not looking that way, but just stay with me. All right, now we off to another trade. We going short. There go my entry right there. If not that entry, we could take this one, but we don't cherry pick trades. My entry would have been here. Stop loss right here. 52 pips. First take profit of 52 pips, but look how far it ran to the next level, 300 pips. But let's do all at a 1-to-1 take profit. So plus 52. So in the past, so for May, June, and July, I made 62 pips on the AUD USD. Now let's find another pair. I'm gonna close my eyes. And I'm just gonna pick a pair, pick a pair, boom, drag it to the chart. What pair did we pick? The Euro Swiss franc. Okay, so let's go over. Believe you me, guys, I'm not cherry picking. I closed my eyes and dragged it onto the chart. So here we go. So we start back at May. We don't trade this because we don't know when the turnaround is. Here's what we do trade. Bam. That's the close of the candle. That's the close right here, guys. That's where that candle closed. Right here, this line, that little line right there. That's where the candle closed. Stop loss 75 pips. Clearly you can see we made it. 75 pips down. Plus 75. We up to 137 pips. Let's keep going. Where's my next trade? Where's my next trade? Where's my next trade? Boom. The reason I take this trade, because remember, I can't see this. This is all I'm gonna see. I'm in an overbought condition on a downtrend, coming off a level of resistance. I'm gone. Close right here. Stop loss 56 pips. Clearly I made it. Nothing hit my stop loss. Plus 56. Let's go. 193. All right. So right here at the end of July, we had a trade also, a signal right there to go short. Stop loss would have been 60 pips. But let's see, did we hit the take profit? Nope. We hit the take profit in August, y'all. The first day, no. Let me just move this line 1 second. Let's see. So we hit the take profit the second day of August. So guess what? We're not gonna count that trade. So let's go ahead and just find one more currency pair. We are at 16 minutes. Wow, I said 12 minutes on this video. But let's go one more currency pair. I'm gonna close my eyes again. I'm gonna go try to go above that line. I just drug it on. What is that? GBP Swiss franc. This joker gave us no trades in 3 months. Well, it gave us one at the end. So we got to pick another pair. Well, it gave us this trade. Let me stop. It gave us this trade. We're going to stay right here. It gave us this trade coming off this level right here of resistance. So let's take it. 1 to 1, 191 pips. So if you go 1 to 1, 191 pips down. But if you let it ride to your first level of resistance and see what happens, you actually hit 382 pips. I mean, not resistance, support. 382 pips. And if you was bold enough to let it keep going, let it keep falling, let's say if you added some fundamental data into your trading, which means you was watching the news and you knew that everyone's saying the British pound is a sell and it's weak because of all the Brexit situation that's going on, you probably would have stayed in this pair, and this thing fell 900 and some odd pips. But since we don't cherry pick, I would have took half of my position off at 191 pips. So let's just take 191 pips. Unfortunately, there's no other entry. There's a smart, well, no, I'm lying. Here's an entry right here. This is in an overbought. We trade down, momentum is down. Everything is going short. Don't cherry pick trades. We take the signal as they are. Here's your entry. 139. Clearly we made it. 139. If I take this short right here, this baby short right here, here's my entry. 245. Didn't get 245 to the month of August, so we don't count it. So 139. Now guys, I believe this was 3 currency pairs that we just looked at. And over the course of 3 months, we made 523 pips in 3 pairs, right? Let me show you guys something. I trade this many pairs. These are all the pairs that I trade. Okay. This is, let's see, this is 18. No, this is 6, 12, 18 plus 15 right here. That's 23. 6, 12, 18. Oh, hold on. 6, 12, 18, 24, 5, 26, 27, 28, 29, 30, 31, 32, 33. I say 33 because I use one of these charts for quick analysis. So it's a duplicate. One of these charts are a duplicate. But this is 33 pairs. 3 pairs gave us 500 and some odd pips, and I believe that was let's see, where's my calculator again? 3 pairs gave us 523 pips. Imagine if you traded 33 pairs, and out of those 33 pairs, let's just say 18 of those pairs gave you the same amount of pips. So 18 divided by 3 pairs is 6. So 523 times 7. I'm sorry. Yeah, 523 times 7. What am I doing here? 523 times 7. Because that'll be 21 pairs. And if every 3 of them gave you 523 pips, that'll be 7 times. That gave you, over the course of the 3 months, you got 3,661 pips. Let's say you're trading a half a standard, just a half a standard, not even a full standard lot. You're trading at $5 per pip. $18,000 over the course of the 3 months. But let's say out of the $18,000, you actually gave back to the market on losses. You gave the market back, let's say it only had a hit rate of 75%. So you gave the market back minus 25%. What am I doing? So let's do an even number. 13,000 times 25%. You gave the market back $3,200. So you walk with $10,000 you made in addition to whatever else you do to make money every 3 months. Additional $10,000 in your pocket. At some point, if you continue to do that in a trading account and just let that account compound and grow, you'll be able to walk away from that other job or other source of income real soon, and you trade this simple strategy. Again, guys, when you start trading, you start with the larger time frames. You understand why the market moves the way that it does. You trade you a really good strategy. When I say a good strategy, a strategy that fits your personality. Not everyone is designed to be a day trader. I am not. I tried. It doesn't work for me. A, I don't have enough time in the day. I still have a regular job. And it just doesn't fit my personality. I'm an anxious person. Trading on the larger time frames helps me remain cool, especially in times of drawdown. And I do have my share of drawdown in the market. But again, this strategy has a 75 to 85% hit rate. I've been trading for years now, maybe 5 or 6 years, and I still haven't gotten over the fact that I don't like to lose trades. I accept it, I'm better at it, but I still don't like to lose trades. So I trade on the larger time frames because for me, I am a more successful trader. So, hey guys, thank you for rolling with me, back testing this strategy. Please make sure you like the video, share the video, and subscribe to the page. I know this video is kind of long. Didn't mean it to be that way, but it just turned out that way. Appreciate it, you guys. If you have any questions, comments, or anything like that, comments, you can leave them under the video. Any questions, you can ask questions via the comments, through the comments also. And I'll get back at you as soon as I can. Alrighty, you guys have a good one.